The idea of a fuel excise cut, well, you mentioned that there. What do you think of the economics of it, particularly in the context of the real movements in this space are driven out of Saudi Arabia and elsewhere?
Yeah, and look, the RBA will be looking through all of this. Petrol prices, I should say, are up a lot in the quarter, up 7%, but that's not what's driving the RBA's thinking. And I mean, look, to do a petrol excise cut now would be very popular. It would be reasonably expensive, depending on what they did, say 5 or 6 billion. But of course, that's 5 or 6 billion you put into the economy right when the RBA is trying to actually slow the economy. So it's counterproductive. It'll help with measured inflation, but it'll just raise the chance that we have to have higher rates next year, because the reality is the economy's slowed, but it's resilient and the housing market's performing well and we're producing jobs. So, it's not. The debate has been about whether there's going to be rate cuts next year. Well, I think that's misguided. The debate is actually whether the cash rate's got to go above 5% like it is in every other similar economy around the world. And of course, things like fuel excise cuts will only add to the likelihood that interest rates have to go up even further.
Warren, we're almost out of time, but I do want to pick up something else you said there, that there's signs of domestic inflation, a sticky inflation in services area as well. I just ask you about that because the Treasurer is talking about global effects of the oil price, the OPEC cuts in production, that we're basically, in his statement, he says, I'll read it to you, he says the world is inflicting price pressures on Australians and we are doing our best to ease them. That's his statement. What do you say in response to that?
Look, I'm worried about this. I mean, this is just not right. I mean, we've got domestic inflation. We've got domestic cost pressures on businesses that are trying to pass it through to their customers, which they have been, and that's driving the inflation, whether it's labour costs, whether it's energy costs, whether it's insurance costs, transport costs. Those global factors are playing a role, but the key problem for the RBA and the real risk is domestic, and that's come through loud and clear in these figures. And I worry because the government really does need to, I think, start to change tact here and explain to the community why higher rates are needed to get rid of inflation, rather than trying to distance themselves from it. I think leadership here now is about trying to make it easier for the RBA to get the job done, and also, of course, explaining to people more broadly what we're trying to achieve, which is getting inflation down. That's what's hurting out there.
Maybe Jim Chalmers taking on a bit more of his hero Paul Keating's approach.
Yeah, I mean, I think Costello and Keating would have been talking about why we need higher rates at this stage and explaining it to the Australian people. I think it's critical. We'll wait and see. It's a critical 6 months for the government, and this is going to be a major issue.
It is a critical 6 months, no doubt, and it's back to the main game of the economy. And always good to get your insights, Warren. Thanks.
Thanks, Kieran.